tax liability, how far it is realistic or how far it is a misleading, that these are all very subjective issues. But nonetheless, that is there in the bill. Now then, invoice, and then from your ITC ledger, like in your ITC ledger you will have details of all the ITC, that means all in respect of all your inward supplies, that is purchases. But from that, which is an eligible purchase and which is an ineligible purchase, that means which is eligible for ITC and which is not eligible for ITC. That means again you construct the law that there is going to be a negative list of items on which no input tax credit will be available. Like presently we have under state VAT, presently we have under SIN VAT. So that also we are going to have. And if that, then you have to identify from this ITC ledger how much is my eligible ITC and how much is ineligible. And accordingly the ineligible ITC you have to reverse. And that reversal is to be paid from your, maybe again from your ITC account or from cash account, whatever this may be. So that quantum of eligibility and ineligibility you have to calculate. So ITC ledger will be created automatically, inward supplies details will be auto-populated, but from there you have to do addition and deletion based on your own system, and then calculation of eligibility and ineligibility and their quantum, that also to be done by you on the basis of your own system. Then invoice partial credit, that means if there could be some invoices based on which some partial credit could be taken this month, partial credit next month. So there could be such situations as well. So that also you can take care of. Then CG, that is capital goods. 2 installments. It is not said 2 installments, but it is saying that it could be again in a number of installments, and that could be over a period. That means for say, let's say for example, like presently in case of capital goods we have 50% in the financial year in which you have received and balance 50% next year. So similar provision is going to be made in GST as well. And inputs, in case of one lot recorded in books and in case of one invoice having multiple lots, then last purchase recorded. That someone said na, that suppose if you have an invoice and the goods are received under one invoice in one lot, then whenever the invoice, that means the inward supplies is recorded in your books, you can claim the ITC. But in case of suppose one invoice but multiple lots, the goods are coming in multiple lots, that means if it is broken into a number of consignments, then the last consignment when you receive and recorded in your books of account, then only you can claim the ITC. Then revision, just like in case of sales, in case of purchase also revisions could be done. And inward supplies again for nil rated, exempted and non-GST, again for interstate and intrastate, and for compounding taxpayers, that means when you are purchasing from a compounding taxpayer, that means that is not eligible for ITC, so that also to be captured separately. And from unregistered dealers, that is also to be captured separately. And then ISD credit, that means credit received from ISD, that means again like in case of services we have your factory in one state and head office in another state. So from your head office, service tax credit is distributed as an ISD. Similarly, it is going to be in GST as well. And so from your ISD, on that basis, whatever credit you are taking, that details also to be given. Then TDS credit, like presently we have whatever TDS is deducted by the deductor, that details also will be there. And corrections in earlier returns, that means if there was any error in an earlier return or any revision is required in an earlier return, so that also can be done through this return. So these are the details of GSTR 2. Now friends, based on that we can more or less understand what are the different types of data or different types of reports or different types of information pertaining to outward supplies and pertaining to inward supplies are required to be submitted in the form of GSTR 1 and GSTR 2. So for that all this data is actually to be captured by me into my system. So for that I need to develop a system whereby I will get all this data from. So that is the most essential part of it. And GSTR 3, as I said, the monthly consolidated return. More or less, this GSTR 3 you can understand that in GSTR 3 what will you have? Consolidated returns, details of sales, details of purchases. So all those details will be auto-populated from GSTR 1 and GSTR 2.
Yes.
And that is why GSTR 3 the due date is 20th. So for GSTR 1 that is sale by 15th, for purchases by 17th, and for consolidated return it is by 20th. So that here, yes.
Sales is 10th. GSTR 1, the date is 10th.
GSTR 1 10th. No, 15th. Huh?
Just check 215.
Huh?
Just check 215.
Anyway, that date is not very important. I can just check and tell you. Where are you looking at?
In your presentation,
In this presentation.
Acha, here it is 10th.
Yes.
Next time I can, then that means, let me check out I'll tell you. That is not very important. I'll tell you that. So whatever, let's say 10th. So 10th, that means 10th, 15th and 20th. Oh, that was probably just 1 second. 1 second.
10, 15, 20.
Okay. Oh, I made a mistake. GSTR 1 by 10, GSTR 2 by 15 and GSTR 3 by 20. Right?
Yes.
Actually for IST it was 17th. 18th. GSTR 4 it is 18th. Right. And GSTR 7 also it is 10th. Right. So 10th, 15th and 20th. Correct.
reconciliation date is 17th.
Huh?
Reconciliation date is 17th. Sales
Reconciliation?
and purchase reconciliation they have given 17th.
The 17th.
GSTR 2
Right.
and
Okay.
20th.
No issue. I stand corrected. Right. So 10th, 15th and 20th. Right. Then GSTR 3 ITC utilized. Now ITC utilized details also in GSTR 3 apart from the purchase and sales details. Like let's start from here. So now mind you, in GSTR 3 I told you initially that in GSTR 3 surprisingly they are asking for gross turnover and then how much is your export turnover, how much is exempted turnover, how much is nil rated turnover and how much is non-GST turnover, and then that equals to net taxable turnover. Now mind you, I really failed to understand how could this happen when the concept itself is supply of goods, supply of services. So why are you talking about turnover? Turnover means what? Normally we all understand turnover means sales.
Yes.
So how can you talk about when it is on supply, then how can you compute net taxable turnover by deducting these different types of turnover from your gross turnover? Absolutely misleading. Maybe they can subsequently come out that okay, turnover for this purpose means all supplies. So that is possible. Again, as I said, we have to construct the GST law. So we have to construct the definitions as well. That what is going to be the definition of turnover? We are coming to that. What is going to be the definition of goods and what is going to be the definition of service?
Yes.
So gross turnover, then export turnover, exempted turnover, nil rated turnover, non-GST turnover, and equals to net taxable turnover. And immediately after that, you find supplies, outward and inward, GST 1 and GST 2. From that, auto-populated GSTR 3. Then tax on outward, tax on inward. So when you are talking about supplies separately and tax on that, then why at all this turnover and taxable turnover? Why should at all you confuse us? Then TDS credit received, cash ledger, mind you again. In that cash ledger, TDS credit received will also be auto-populated. Then tax liability under CGST, SGST, IGST and additional tax. So tax liability under all these 4 different buckets: central GST, state GST, IGST and additional tax. Then revision in earlier invoices, if any, other liabilities, if any, that means interest, penalty, fine, etc. And then as I explained, running electronic ledgers on real-time basis, ITC ledger, cash ledger and liability ledger. Then ITC utilized, against CGST, against SGST and against IGST, against goods and against services. All these reports to be given separately. That means, you see, since you have 3 parallel credit bucket or credit basket, you can say, 3 parallel credit boxes. You have 3 parallel credit boxes. 1 box for CGST credit, 1 box for SGST credit and 1 box for IGST credit. So CGST credit taken in CGST box, SGST in SGST box, IGST in IGST box. Now you have liability also under CGST, SGST and IGST. Now actually all credits are usable, but there is a restriction. CGST credit cannot be used for payment of SGST and SGST credit cannot be used for payment of CGST. So central GST and state GST cross credit is not allowed, cross utilization is not allowed. But so far as IGST credit is concerned, IGST is what? IGST is paid when you have inward supplies from some other state. So when it has come from other state, you have paid IGST. This IGST ideally is going to be a combination of CGST and SGST. So accordingly, IGST is fully vatable. And this IGST credit is first to be utilized for payment of IGST, then for payment of CGST and then for payment of SGST. So there is an order. Now let us not go further into this order etc. because it will unnecessarily confuse, but there will be a principle of how this credit is to be utilized. So that accordingly, following that principle, these credits will be utilized. And then net tax payable under CGST, SGST, IGST and 80 means additional tax. Under all these heads, net tax payable will be calculated accordingly. Option to utilize cash payment first. Mind you, this would be a
Can I get one copy in our email which you are showing?
This presentation?
Because your numbers and this form's numbers are not telling properly.
Which
They
one?
have given the forms, total
Which?
forms are GSTR 1, GSTR 2, GSTR 3.
Which one is not matching?
This is just now which you are telling GSTR 3. GSTR 3.
GSTR 3 has to match with GSTR 3. Anyway, so now option to utilize cash payment first means here I am talking about, like say in central excise, in SENVAT you have credit and you have liability. Suppose your liability is less than a credit. That means suppose you have a credit balance of 100 and you have a liability of 80. Still what I can do is I can make the payment of 80 in cash and I carry forward the credit. That is allowed. Or maybe part of that I use and part I can make in payment in cash and the credit I can carry forward. But under VAT, although under the law there is no such restriction according to me, but the return form provides that first you utilize your credit and then balance, if there is any shortfall you pay in cash, or if you have any surplus payment of cash, that can be claimed as refund. So whatever, so that limitation is there. Similarly here also, is it going to be so? That means this liberty is going to be go away. That is an issue here. Just I pointed out. Then ITC balance, if there is any surplus ITC balance, if you can either carry forward this surplus ITC balance or if you can claim refund on quarterly basis. So that also is there. And then if in respect of supplies, quantity of goods under GSTR 3 and GSTR 8, yes, quantity of goods, mind you, in this GSTR 1, 2 and 3, you do not have to mention the quantity of goods you have supplied or you have sold. But in GSTR 8, which will be the annual return, in that return you have to give or disclose the quantity of goods supplied. Then so now GSTR 1 outward supplies, GSTR 2 inward supplies, GSTR 6 ISD, GSTR 7 TDS of deductors, ITC ledger, cash ledger and liability. 7 different reports. From all these 7 different reports, your GSTR 3 will be auto-populated. Because the data from all these 7 different reports will come to GSTR 3. Accordingly, your GSTR 3 will automatically be created and then you have to do all those reversal of ITC and if there is any addition or deletion on your ITC items, etc. And plus so missing details. That means if there is any missing detail, you can incorporate it. So now the return can be filed in offline mode or online mode, like presently we have. So payment by return and ITC and capital will be, and the due date. There is some mistake here, but anyway, the due date, the return is basically, it is said that the return is to be filed within due date, and if you cannot file within due date, you can file late also along with on payment of late fee. That is the. So friends, this was basically regarding GSTR 1, 2 and 3, and now from these details only, GSTR 8, if I straightway go to GSTR 8, that is annual return. So all these details from there only, again your GSTR 8 will be automatically, means auto-populated, and then some further details like, as I said, quantity of goods sold or cleared or outward supply. So that also to be mentioned. So similarly some more details are to be inserted in that GSTR 8, and finally this GSTR 8 will be submitted by 31st of December. That means you are getting 9 months time. I'll first come to GSTR 8 and then come to GSTR 9. So okay, let me, instead of that, let's talk about GSTR 4 first. In GSTR 4,
so in GSTR 3 you said that there wasn't an option regarding whether cash payment can be utilized first for payment and then credit. So I didn't get the logic. Why would anybody want to utilize cash payment first?
there could be different situations. But anyway, let's talk about those issues later on. So GSTR 4, compounding, in case of compounding dealers, as I said, the tax will be payable at a fixed rate and no ITC like in present under state VAT, similarly. But here mind you, under GST it will be both under central GST and state GST. and of course subject to that threshold limit of turnover, etc. Then it will be filed quarterly basis, and supply value of supplies, tax paid with the details of tax payment, and purchase information, invoice level purchase information from normal taxpayers. That means how much purchases I have purchased from different normal taxpayers means who are not under compoundings. Those details are to be given under GST. And import of goods and services. Mind you, presently under state VAT, a compounding dealer is not permitted to have import. But now under GST, even import will be allowed. Interstate purchases may not be allowed, but import will be allowed. Import of goods and services both. And export will also be allowed. So purchases from registered taxpayer and from unregistered dealers under reverse charge, means where reverse charge is applicable, those details are also to be given. So these are the various details to be given in GST. So now friends, if I summarize here on the basis of this only, because then we have ISD register also, similarly very simple details of credit received and credit distributed, those details are to be given. So based on these details, again we can now make out that GSTR 8 on an annual basis, that would also be compiled. Most of the fields will be auto-populated, and then the balance to be filled up, and this GSTR 8 is to be filed annually. So as Mr. Saha referred to, that if you find that there has been any omission or commission in any of these monthly returns which could not be rectified earlier, all those can be now rectified, and the annual, because now you will have annual data, so in that annual data will be now uploaded in GSTR 8. So this is basically regarding returns.
That will be rectified on monthly return itself, or in total it will be rectified?
No, as I said, every month you have a scope to rectify for any earlier return, and finally after the close of the year, if you find that still some omission has been there or some rectification is there, so that can be done in the annual return.
Total fee?
Total, yes, because the annual return will be on annual basis. Total consolidated yearly figures. Now friends, just few issues as I said, like on goods and services. Most important issue is goods and services. So all along we find, although under GST we have been talking about that there would be no discrimination between goods and services, but nonetheless there is all the difference between goods and services. So if there is a difference between goods and services, so you have to identify which one is goods, which one is services. For that matter, in case of works contract, how much, which would be goods, which would be services. In case of restaurant services, Mr. Saha said. So this definition, the difference between goods and services, for that matter you have to refer to the definitions, and for that matter goods, the definition remains same as we so far understand, but so far as services is concerned, now you know how they have defined this proposed Constitution 122nd Amendment Bill. This has defined service, and the definition says service means anything other than goods. What does it mean, friends? What is the present definition of service? The present definition of service is any activity carried out by a person for another for consideration. So that means there has to be some activity, and there has to be two separate persons, one person doing an activity for the other for a consideration. So there are two persons and an activity for a consideration. So that means it has to be a commercial transaction. Until and unless it is a commercial transaction, it cannot be a service under the present law. But the proposed law says that service means anything other than goods. Now what is anything? Now thing means what? If it is not goods means what? Tax is to be collected. For that you have to identify a taxable event. So it has to be an event. So what is the event here? So far we have event of manufacture for central excise, import for customs, sale of goods for sales tax or VAT, provision of services for a service tax, for which provision of service means carrying out an activity. Now here it does not talk about goods or services or provision or activity or anything. It says anything. Anything. It's so ridiculous a definition. Anything means what? Anything means there is something. There are books. So can you ask me to pay tax on this? I have this, I own this, or I own a property. So that means wealth tax. Can I, like presently I pay wealth tax on whatever wealth I have or I possess. So there has to be some taxable event. That is not specified. If that be so, if at all it is intended to be to tax any activity, does it mean that even without consideration also? What I am saying is even if there is no activity, but suppose even if it is an activity, but activity without consideration also, can it be taxed? It cannot be. It is not practical. but the definition is given like that. Anything other than goods. It does not have a real meaning. It is not real. The definition itself is not real. It does not signify anything. It does not carry any meaning. It is meaningless. And if it is meaningless, if it cannot be identified as a taxable event, as a taxable activity, how can you pay tax? So if a tax law is not practically implementable, it is not a law. So the very validity of this entire GST law, for that matter, the very validity of this proposed GST law or this amendment, constitutional amendment, that itself probably could be defeated if this definition continues to be like this. That is my observation. This is very difficult. It is going to really create a mess, as I said. That is, I am repeatedly saying that what I find is, I do not know whether we are actually heading towards this. Turnover we have already explained. Supply we have already discussed. So with this, friends, thank you very much for giving me a present hearing. If there is any question still